evening, my name is Don Smith. I'm here to discuss the technical condition of the market. I've been following these markets a long time, and I'm quite intrigued at the amount of distribution that we exhibited last year throughout most of 2015, whereby the general media was uncompromisingly bullish. Meanwhile, the markets are rolling over. And then when they plummeted late summer, we were told anything from program traders were causing it to there was a glitch in the system and it caused a lot of trades to be executed when they shouldn't have. There was a lot of panic and fear. They came up with all kinds of reasons why the market sold off, other than the fact that simply people wanted to sell. Hello. So anyway, after that period, we did have a rebound up to attempt to overtake those highs that it made earlier in the year, and that didn't happen. We only managed to get up to the 18,000 level on the Dow after the September sell-off. So for that subsequent period of about 2 months, we had lower highs and lower lows until we get into 2016. Now, if you just take off those last few days that the market really came off here in early 2016, and you look at that pattern of higher highs and higher lows, it's quite easy to see why it fell off a cliff, just the same as it did back in late summer. Same pattern. It's just going like waving up, waving down, waving up, but lower, waving down, and then boom, and then shoom, and then down it goes. So at any rate, we did sell off here quite viciously since the beginning of the year, and now we're in recovery mode. I would only call it a bear market rally at this point. I think we're going to rally up a few hundred points from here. It will be probably characterized by typical bull market behavior with sharp up days with declining volume, indicating there's more than likely a lot of short covering going on. People will be looking to unload for sure when it gets up to that 17 and change level. It's hard to say exactly where that is. Technical analysis, you can never pinpoint exactly, and nor should you, because markets are designed so that the most people lose money. So what happens is it can overshoot those technical areas or just fall shy of them, just to fool most traders that follow technical analysis. So you have to bear that in mind, and you have to act accordingly. And certainly don't place your stops very near those key points. So that's the daily. This is the weekly on the Dow Jones right here. And this shows a little more pronounced action, more compressed. You can see that the January 16th sell-off just fell shy of the late September sell-off. And now, like I said, we're in recovery mode. We might get another 800 to 1,000 points from here. I'm not so sure if that's going to happen. Technically, it could happen. It wouldn't be anything out of the ordinary. However, I think the technical damage has been done, and I think a lot of people now are looking to sell into the rally as opposed to buy the dip. So the selling is going to be more on the negative side than it has been in the past, because the mentality is starting to change here. Now we have Amazon, and you can see that late September, October time frame, it started to rally, and it moved up quite smartly from $500 up to the $700 range. Then it traded sideways for a couple of months there, and then it tried to go higher, and where it marked failure there, it did just that. It failed to overtake by any meaningful margin, and it only got up to around 680. And then it turned tail and sold off with the general market down to much lower levels. And then just the last day or two, they came out with this nasty news that took it down, for example, $48 in one day, which is a lot, for a $587 stock. It's a big percentage, 7.61%. It just shows you that the markets have the ability to sell off. Don't ever kid yourself about that. You also had very high volume on this retreat here. So, much the same as a lot of other charts, this is looking quite bearish. We can look at Apple and we can see it formed a double top in May through August. Quite nasty. Once again, the media was, when it was back up to the 130 level, they were, ridiculously bullish. And then when it failed there, it certainly wasted no time falling from 132 down to 90 area. And then, of course, it recovered like the general market up to 122 in the first week of November. And then it just fell again right straight out of bed. And now with these nasty earnings that came out a week or so ago, it wasted no time getting right back down to that same area. So much the same as the general market. We're threatening to take out that low. That will be not a good development. And like everything else that's going on right now, we will have some sort of a rally here that will allow some smart people to unload. But it'll be a sell the rally case, I'm almost certain of. Now we look at something with a breath of fresh air, and we see where some smart money is starting to go into. Now, this is Barrick Gold. This is probably a good turnaround situation, would best describe it, because they've really cut their cost. It's not like the old Barrick where they hedged a lot of their production. These guys are now positioned to take advantage of the rising gold price. Very much the same as a lot of their lower capitalized producers in the space. So they're in a very good position here to do very well. And this is the bellwether. This is the one to watch. And when Barrick acts well, it's not long after that the gold price follows. So I think we've got a nice move coming up here. And this is a great thing to pick up here. And you shouldn't waste any time doing so, because there it is trading right at its recent high. And I wouldn't be at all surprised to see this thing with a $15, $18 handle on it in the next 60 to 90 days. Detour Gold, another excellent example of a well-constructed chart here. And here we are at 1704, up $1.29, up 8% on Friday alone. Very impressive move. It's in a clear up channel. Both the 50 and the 200-day average are moving up nicely with it. It's trading well above that. This is a healthy looking situation. I'd be buying this one with both hands along with Barrick. And here we go, McEwen Mining. This is Rob McEwen. This is the founder of Goldcorp. This is his company that he has. He has mines in Canada and the US and Mexico. Maybe not Canada. I have to clarify that one. I know it's definitely Mexico and the US. I'd have to dig into the fundamentals a little bit. But it's acting extremely well. And for a small cap stock, it's doing very nicely here. And I can see that when it gets up above $1.75, which is very close to its trading, where it's trading right now, this thing's airborne. It's going up markedly more from here for sure. Then we have Goldcorp, which I mentioned earlier. It has a bit of operational short-term issues that will be overcome in the very short term. When they report on February 18th, it'll reflect those shortfalls that they've had for production. But I think going past that, they're in fine shape, and certainly the stock price is a bargain here. I mean, you just can't imagine that you could ever buy Goldcorp down here for this price. And when gold lifts up to $1,200, $1,300, $1,400, the stock's a double easily. Here we are, AXR. If that same scenario were to play out with this one, this would be a 5-bagger in that environment. So we have a situation here where it it had plenty of opportunity to go lower, and it didn't. And these guys have a mine that's on care and maintenance. It's a large silver mine, United Keno Hill, Northwest Territories, very well-known silver deposit up there. And there's a lot of silver in the ground, and these guys are just, it's on care and maintenance. They're just waiting until the price hits a certain level. I wouldn't think it's too much higher than where silver is trading right now. And this thing will certainly provide a lot of leverage to a rising silver price. And you can see just in the last couple of weeks how it's really, come up here quite nicely. The volume pattern is very good here too. Like you had it rising on pretty sharp volume there into September second and third week. And then when it sold off, the volume just dropped right off. And now that it's being picked back up down at these levels and upwards, it's had lots of volume, indicating that people are accumulating this. Newmont Mining, I mean, these are excellent looking moves here. I mean, to go from 16 to 20 in an environment where everybody and their brother is selling stocks says something. There's some serious money moving into these gold stocks, including the likes of Carl Icahn and guys like that were buying into Barrick. I think he put $20 million into Barrick a while ago, of course, when Barrick was less than $10 a share. So he's not stupid, and right. You have to follow the smart money. And right now, I think the smart money is moving into these things because nobody really had too much good things to say about them in the media. And then we have Lakeshore Gold, which is a Canadian producer, which is a good, very well positioned to take advantage of a good gold price. I think, if gold does anything like I believe it will, because it's been so long here, it's like a coil. It's just been tightened and tightened and tightened, and when it unwinds, there'll be a lot of pressure, upward pressure, and I think already the smart money has moved into these things. It's just a matter of time. Money flows attract money flows, and when you get smart money going into these golds and you get the uptrends solidly in place, then people start to pay attention, and then you have mutual funds moving in, then you have the hedge funds moving in, and the retirement funds moving in, and and then last, of course, almost at the end of the move, you have the public moving in, and we're nowhere near that stage. We're going to go through plenty of phases before we get anywhere near the blow-off stage in the gold market, and that could be significantly higher from where we're sitting right now. So that's it for tonight. That's tonight's update, January 29th, 2016. We'll be happy to review any questions anyone may have. And we'll have our next update 1 week from tonight. Thank you for listening.